In SEC lawsuit, Grayscale calls spot ETF rejection arbitrary, capricious, and discriminatory. The legal brief filed Tuesday argues that the SEC's logic for denying Grayscale's application to convert the Grayscale Bitcoin Trust to a spot Bitcoin ETF is flawed and inconsistently applied. Grayscale Investments called the U.S. Securities and Exchange Commission's (SEC) June decision to reject its application to convert its flagship Grayscale Bitcoin Trust (GBTC) into a spot Bitcoin exchange-traded fund (ETF) arbitrary, capricious, and discriminatory in an opening legal brief filed as part of its lawsuit against the regulator. Grayscale filed suit against the SEC on June 29, asking the U.S. Court of Appeals for the District of Columbia Circuit to review the regulator's decision, which the SEC has published earlier in the day. Grayscale is a wholly owned subsidiary of Digital Currency Group, the parent company of CoinDesk. Grayscale is far from the only company whose spot Bitcoin ETF application has been rejected. Over the last year, the SEC has denied over a dozen similar applications from other major players in the crypto space, including WisdomTree and ARK21 shares, citing a lack of investor protections and the potential for fraud and manipulation. WisdomTree's latest application was rejected the same day Grayscale filed its brief. While the agency has repeatedly rejected Bitcoin spot ETF applications, it has approved several Bitcoin futures ETFs, making a distinction between the offerings that Grayscale's lawyers say is arbitrary and outside the Commission's authority. In the brief, the attorneys argue that, because Bitcoin futures and spot Bitcoin both follow the URL for the full article. For more on this story, visit the news article link.